Welcome everyone on the call. Welcome to the new people who are watching us for this first time, and welcome to the old members that are always hanging with us on these calls. So let me just get into the topic. So today I'm going to, as usual, I'm going to talk about the account performance, and we're going to talk about the main features of EazyBot. And I'll give just a little bit of recap of what those sentences here means, what does pulling down average price means, what does take profit means. And let me just get to the whiteboard for a while here, because I know there are new people to this call. So there are some facts in the crypto market that we cannot change. And there are many unknowns in the crypto market that we can't change. We can only use that changes or use that movements in the market in our favor by designing something that can move along with the wave and buy and sell and make profit. And that's exactly what we did here. Now, the fact about the crypto market is that the crypto market has a daily movement of between 1 to 5%, up or down, plus or minus. No one can know exactly if the next movement is going to be up or it's going to be down. In a good days, the market can go up by more than 20% in a single day. In a bad day, the market can go down more than 20% in a single day, even more or less. It all depends on the behavior of people that are trading into the crypto market, and also based on the behavior of the big sharks or the big whales in the market that are buying in big quantities and selling in big quantities, which and none of those are in our control. What we did here in EazyBot, that we worked on the worst case scenario. That what's the worst case scenario here in the crypto market, apart from all the market crashes and goes to zero, which is close to impossible, that the cryptocurrency is going to disappear completely. So the worst case scenario that can happen, let me just draw it here in the graph, in this small chart. So let's say this is the time line, the horizontal line here is the time. Let me just write it down. This is time, and here down is basically the price. The vertical line is the price of the coin. So in EazyBot, we only do spot trading. Spot trading, that means you are buying coin against coin. We're not doing leverage trading. We're not doing futures trading. We're not doing margin tradings. It's just whatever money we have, we buy crypto with that amount. Let's say, for example, if you have 20,000 today, you can buy 1 Bitcoin, but you're not buying more than this. The leverage trading can make more money into the trading, but it has also big risk, because you're not trading with your money. You're trading with much more than your money. The profit is yours, and the loss is also on you. That's why we see many people actually losing a lot of money into trading, whether it's crypto or it's forex or whatever it is, because they play with the margin. They don't actually buy and sell with their own money. But in here, in EazyBot, we're only using spot trading. That means the risk is quite low. But what can happen? What can happen in the crypto market? What's the worst thing that can happen? In my opinion, the worst thing that can happen is that the market behaves like this. You start here at 0.0, trading to buy some coins, and then the market starts from that point only going down, moves down and down and down, and it stays down here and never goes back up again to 0.0, never goes back up again to 0.0. So this is the worst thing that can happen. And we have seen this happening based on the last many years since the crypto market trading started. So what happens in EazyBot? We designed the EazyBot to work in such kind of scenario that if the market goes down and it stays down, what's going to happen? The EazyBot has a strategy built in which is called the EazyBot strategy. And what's happening here exactly, I'm not going to go deeper into mathematics. I'm just going to explain it in simple words. There is a trade that was opened at this price point here on the top. If the market goes down, it will buy and sell, buy and sell, buy and sell based on the current market scenario. But what happens to this trade on the top? EazyBot is designed that to take part of the profit that was made in the bottom of the market and use it to pull down this trade with the specific mathematical formulas to bring this down to the current market price, and again close this trade which was opened at the top of the market at the bottom of the market and make profit. As simple as this. We cannot control the market. We cannot decide what's the next move of the market. It's just designed to work on the market as it is. The market can do like this. This is the worst thing that can happen in the market. Now, how much did this drop? It can be 20%, can be 30%, can be 50%, can be 70, can be 80%. Even if that happens, still EasyBot is going to buy and sell and trade and bring down, while you're making profit, is going to bring down your trade on the top, along with all the trades in between. It doesn't leave anything behind, so it brings all the trades down to the current market price and then close everything and bring back your money from the coins to your USDT or US dollar account, and then start all over again at the bottom of the market. And we have a couple of examples. If you look at our Vimeo channel, we have shared a couple of examples. One of them, we've seen some trades closing at minus 35%, and soon we will see more than 40% and even 50% and so on and so forth. Just a matter of time, just to show us all of this. So this is simply how it works. If the market is going in a good way, going in a bull market, it's going to be just opening cycle, closing cycle, opening cycle, closing cycle, and making profit, consistent profit all the time. If the market is going sideways, it still is going to be buying and selling within the normal daily movement of plus or minus 1 to 5%. If it's more, if it's less, it still is going to be working on that market and make profit. So the example that I'm going to show you now is an example of a trade that was opened here at the top of the market. And right now the price is here at the bottom of the market, and we will see the actual movement of the average price on the top. We see it moving down from last week. We have seen something now this week. Within a week, some trades happened, and that average price actually have moved down. So we will look at that. Now, the other thing is EasyBot is being designed also to take the maximum profit from the market. And how is that happening? Let me just also make a chart here. Or let me not make a chart, I'll just go to the trade direct. Let's say it bought a trade here, or it bought some coins at this point. If the market goes up, so at the price of, if the price increased by 1.5%, it is designed to start taking profit. But it doesn't take profit immediately. It waits for the market to go to the highest point. Now, again, EasyBot doesn't depend on technical analysis like support and resistance and so on. It doesn't also depend on news or indicators or whatever. It's just all mathematical formula. So the rule here is that if it comes to 1.5%, it starts the process of taking profit, but it doesn't take profit immediately. It waits for the market to go down by minus 0.5% before it takes profit. Now, what does that mean in terms of profitability? That means if the market at that point was moving high and it was a bull market, or there was a good news in the market was just moving up, it's going to follow the trend with an imaginary line of minus 0.5%. So it goes up, up, up until it starts moving down by 0.5%. And this is where it's going to close the trade and make this much of profit. Instead of just making that small profit of 1% or 1.5%, it makes sometimes, we've seen some trades making 14% just because of this feature. And we're going to see some examples for this feature. Okay, so let's go back now to the presentation and show you the real examples. Okay, now this is pulling down the average price. This is the example that we have been following for many weeks now. Now this coin, it's AAVE. When this trade started, or when this bot started, it was early in April, when the price of this coin was 251. 251. See where the price is now? 78. That means we have a drop of like almost 70%. If we make the math, it's a big drop. And the market actually went down to 50 a couple of weeks back. It went to 50 and then went back up again. It kept on fluctuating. So what happened here? The market was at 251 when we started. Now the market went down to 70s and it stayed in 70s for a long time. So what's happening during the day-to-day trades? The average price is moving down. Let's see the last week what happened. In the last week, our average price was 155.99, so almost 156. Today, the average price moved down to 154.68. Yes, the movement is small because the market wasn't that much fluctuating, but that's fine. That's exactly how it's designed to work. So eventually, this average price is going to come down to the 70th if the market doesn't go back up again. If the market moves up fast, it's going to be meeting with the average price somewhere in between, and it goes above that by 1.5%, then it starts the process of taking profit and close the whole trade, start all over again at that point of time. Let's look at some other analysis here. So the starting price was 251, the average price was 156. This is last week on 10th of October. And the average price moved down at that time from the initial price by 94.37 USDT, which is equivalent to 37.59%. And the total profit made while this market is moving down is 1,251.14. Today, after 1 week, the starting price is the same. Definitely, we cannot change it because that's a fixed amount. The average price moved down to 154.68. That means the initial trade or the initial price was moved down by 96.37, which is equivalent to 38.37%. That means the average price moved down almost by 1% throughout the last week. And the profit made have increased from 1,258 to 1,265.86. And next week, we'll see other movements, because during the week, there will be some movements that makes profit and use part of the profit to bring down the average price. So this is about moving down the average price. About take profit retracement. Now, this is one trade that we took as an example for this week. If you see on the top right here, this coin is DOT on the top left, DOT/USDT. And if you look on the right-hand side, this is the trade details. And this is a kind of old trade, but this is what we're going to share today. So this buy started on 15th of August at 2:24 a.m. Dubai time. So you can go to the chart, change it to GMT +4, and this will show you the exact chart. So it started at that time at this, you see the lower yellow line. This is where it started, the price of 8.95. So 8.95, and that's exactly here where it started, somewhere here. If you look at the time down, this is 15, and then it was 2 o'clock, so probably just way before this one. So somewhere here it started. And then from that point, what happened, the market was just fluctuating up and down, but with a low margin, not a big one, to reach 1.5% to take profit. And it was in somewhere here, it reached to 1.5%. But the bot decided not to sell here. Why? Because it did not make that retracement or coming down by 0.5% yet. So it waited for the market to go up and reach to the highest point, which is here. And then when it started moving down, this was the point where it actually closed the trade. So instead of making just 1% or 1.5%, made 3.88%, almost 4%. Now we have seen like 14% before and 12% and so on and so forth. So this is just a simple example for that. And you can verify the numbers if you want, go to the Binance and check all of these numbers here and the dates. And keep in mind that you're checking the Dubai time, not other time zone. That's about those two things. Now the time is to check we need to check also the performance. So David, can you take over? And because I know that you have it open, the performance review website. Right now, David is going to be sharing with us a real account that we have been following since, I think, 19th of May or something like this, that we check every month how much profit have made, and we are adding to that chart just to have some kind of data to show people. But there is something very important here that we have to look at when we see the results here, is that the result, this is the profit that the bot have made. It's not considering the fees that you're paying to EasyBot, the 20%, and not considering also whatever you are paying to your exchange, because there is no way that you can check we can check the exact cost that you have paid to the exchange, because it varies of whether you're using the native coin of the exchange. For example, Binance, if you use BNB, you're getting a discount of 25. And if you are not using that, you're paying 0.1% in every trade, buy or sell. And if you are using BNB, it depends on when did you buy the BNB, where was the price of the BNB at that point when the trade was taken. So David, I give it back to you so that you can show us the analysis of this account.
Yep, awesome. Thank you, Mohammed. And I'm going to jump, before we get into the actual results of the account, we talked about where the market has been. And this graph here really just gives us a nice illustration of what's happened. So we're going to look at the actual performance of the portfolio, but look at this gray line here, guys. This is the average portfolio price of all the coins in the portfolio we're going to look at here. And we're tracking this over the same period of time that we're tracking EasyBot's performance. So we can see that within that first 30 days, we had a huge drop in the market, almost 30%. And then since then, it's never really recovered. It's been down even more than that, 35%. And in that same period of time, the blue line that you're seeing here is EasyBot's performance. And so if we come up to the chart and we hit start here, you're going to see there are 19 coins that were started. This portfolio was started May 19th of 2022. $1,000 was added to each coin, and EazyBot strategy. So no specific or particular modifications were made, simply started this bot, let the EazyBot strategy do the trading, and you can see what's been happening over the last 148, 150 days, profit being generated in this account. And as we mentioned before, we don't make any predictions about which is going to be the best performing coin. So we provide this performance results really to give a sense of confidence that, especially in this market, in this condition of the market that we've been witnessing, can EazyBot actually help me make money? Can EazyBot actually help me make money in cryptocurrency? And the reason we produce this is to hopefully help you to understand the answer is a resounding yes. EazyBot can, if you choose to use it, help you to make money in crypto, regardless of what's happening in the market. You can see here, this is what we looked at just now was earnings in the portfolio. We got just over $3,400 in total earnings over that period of time. And you can see return in terms of percentage. And so you can see the different performance of different coins. We have some that are performing better than others in this same period of time. Now, one of the things that does not surprise us is that Bitcoin didn't perform all that well. We don't make any recommendations about any of the coins, but Bitcoin is known to be one of the less volatile of the more popular coins. And so we include Bitcoin in the available coins that you can choose from because many people are familiar with it. It's likely to be a great project for a long time to come, but it isn't particularly volatile. And EazyBot really thrives on the volatility of the market. Again, volatility just meaning movement, up and down. It's going up a little bit, it's going down a little bit, and it does that often. And the more often it does that, the more opportunities EazyBot sees to generate profit for your account. So we don't make any assumptions. We had no idea of knowing that Matic would perform over 30%. And so this, again, goes back to speak to why you might want to diversify your portfolio so you get the benefit of the breadth of the entire market.